Ladies and gentlemen, good day and welcome to the ADF Foods Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devansh Dedia. Thank you, and over to you, sir.
Thank you, and good evening, everyone. On behalf of ADF Foods Limited, I extend a very warm welcome to all the participants on Q2 and H1 FY24 financial results discussion call. Today on the call, we have Mr. Bimal Thakkar, Chairman and Managing Director and CEO, Mr. Shardul Doshi, the Chief Financial Officer, and Mr. Sumay Thakkar, the General Manager, Sales and Strategy. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on the exchanges and on the company's website. A short disclaimer before we start this call. This call will contain some of the forward-looking statements which are completely based upon our belief, opinion, and expectation as of today. These statements are not a guarantee of future performance and involve unforeseen risks and uncertainties. With that, I would like to hand over the call to Mr. Bimal Thakkar for his opening remarks. Over to you, sir.
Thank you. Good evening, everyone. Let me take this opportunity to wish everyone a very happy and safe Diwali in advance. We continue to grow steadily in the current quarter too. This quarter was marked by actions that will lay the foundation to future growth. Those following the company may be aware that we have hired Arjun Gua and Balak Banerjee. Mr. Gua is hired as Director of Operations. He is a seasoned food industry veteran with experience of running technical operations of several leading companies. He's held several senior management roles, including Head of Operations and CEO positions both in India and overseas with leading Indian corporations and MNCs. He's experienced in both frozen foods and greenfield projects and proficient both in factory and profit center management. He has hands-on experience across a range of food categories like frozen, ready-to-eat, fruits and vegetables, purees, ice creams, and staples. Besides this responsibility, he will also serve the board in capacity of a whole-time director. Mr. Arjun will help us with our operations planning and future expansions, and thus certain aspects of our greenfield expansion at Surat are back on the drawing board. Mr. Banerjee will be President of the India domestic business. He has had experience in starting up businesses and has launched new brands and products during his long stint with a leading Indian conglomerate. Mr. Banerjee will be instrumental in driving the growth of our ADF Soul brand. It is a brand with a lot of promise made for an urban India that wants traditional Indian recipes and international gourmet ranges. We have also hired Neetu Gulshani as Head of Marketing and Branding. She's a professional with over 2 decades of experience in building brands and steering their growth strategies, particularly in the food industry. With our human capital enhanced, we are equipped with able hands to translate plans and policies into concrete actions. As the company has completed 3 decades of listing on the recognized stock exchanges, we would like to celebrate it by rewarding our shareholders with a special dividend of Rs 4 per share, which is 200% of the face value of a share. Our operations have been going smoothly as we saw another quarter of revenue and profit growth. We extended the pickles category offering under ADF Soul brand. Brownfield and debottlenecking investments in Nadiad and Nasik facilities meant that we were able to transfer our leased facility at Surat to the Nadiad facility. This will help save lease overheads and improve efficiency with no loss of overall capacity. I will now hand it over to Shardul, our CFO, for the financial performance. Thank you. Over to you, Shardul.
Thank you. Good evening, everyone. I'll first share the standalone performance of the company. Revenue from operations for Q2 FY24 was rupees 97.3 crores, up 17% YOY and 15.1% Q1Q. EBITDA for the quarter was rupees 22.7 crores, an increase of 46.2% on YOY basis and 7.4% on Q1Q basis. EBITDA margin was 23.3%, expanding by 465 basis points on a yearly basis. PAT was rupees 17.7 crores, up 35.4% on YOY basis and 8.3% on Q1Q basis. PAT margin for the quarter was 18.2%, an increase of 247 basis points on a yearly basis. For the half year ended 30th September 2023, revenue from operations was rupees 181.9 crores, up 17.1% YOY. EBITDA was rupees 43.8 crores, nearly doubling, registering an increase of 92% YOY. EBITDA margin was 24.1%, expanding by 938 basis points YOY. And PAT was rupees 34.1 crores, up 66.3% YOY, with a PAT margin of 18.7%, an increase of 554 basis points on a yearly basis. Coming to the console performance, revenue from operations for the quarter was rupees 124.6 crores, up by 16.8% on YOY basis and 10.9% on Q1Q basis. EBITDA for Q2 FY24 was rupees 21.8 crores, a growth of 20.8%, and a marginal decrease of 0.7% on Q1Q basis. EBITDA margin was 17.5%. PAT for the quarter was rupees 14.9 crores, an increase of 9.8% on YOY basis and 1.4% on Q1Q basis. PAT margin for Q2 FY24 was 12%. For the half year ended 30th September 2023, revenue from operations was 237 crores, up 16.2% YOY, and EBITDA was 43.7 crores, growing at 61.2% YOY. EBITDA margin of 18.4%, which is expanded by 514 basis points YOY. PAT was rupees 29.7 crores, up 39.6% YOY, with a PAT margin of 12.5%, an increase of 210 basis points on a yearly basis. As you are aware, we are actively doing brand building exercise in Telluric subsidiary. To strengthen our effort, Bimal just mentioned that we have hired a very senior level person from industry to lead India business. In addition, we have invested in the warehousing space in USA, considering our growth in future, and our freezer is also now installed within the warehouse. This will help us to have very effective distribution in the US market going forward. These investments will give us rich dividend going forward, but currently impacting our P&L at a console level. In addition, ADF Foods USA continues to have losses, but at a considerably lower level compared to the last year, as we have reduced our fixed cost. With this, I request the moderator to open the floor for question and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and one. The first question is from the line of Sahil Bajoria, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. So, sir, I have a couple of questions. So, as I see on ADF Foods website, that you have pickle sauces and paste. So, sir, my question is, why are we not selling frozen foods through solely in India? And given we already do it in our brands in USA.
So that's a great question. we are looking at launching products from our portfolio in a phased manner. We first want to build out on the shelf-stable products, and next year in Q2 is when we will start looking at the other products being introduced under the sole brand.
Okay, sir. Sir, one more question. Like in your presentation, as you mentioned that Surat factory being shifted to Nadiad, and say that it will help save on lease cost. But yet, as I see that lease liabilities, there is a rise in lease liability in the balance sheet. So, sir, why is it? And is there any shift late in the quarter, or has we leased something new at Nadiad or Nashik factory?
I'm going to let Shardul answer that. Shardul?
So what we have done is we have extended our lease for the corporate office in Mumbai for next 5 years, and for that we have created asset and liability.
Okay, yeah, sure, sir.
And the Surat factory, the lease has expired. I mean, we have stopped 30th September, so the savings will start from October onwards for us now.
Yeah, okay, sir. Also, sir, what are some of the new products we launched under Ashoka and Truly Indian? If you can just.
So we've launched quite a few new products in Ashoka brand. Those have received, the response has been encouraging. It's still too premature. It's just been launched recently. And the Truly Indian brand, the whole refresh on the brand has been going. We are in the presentation stage at the moment with supermarkets, and hope to start getting listings from next year onwards.
And so just a follow-up question to this. What are some new categories we have in pipeline?
So we are working on a range of Indian desserts in frozen, which we will be launching in. And then there are some more plant-based products which we are launching, and some more street food products which are being launched.
Okay, yeah, sure, sir. Thank you so much, sir.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is on the line of Sriram R, an investor. Please go ahead.
Thank you for the opportunity. Just one question from my side. So what is the total opportunity we are looking at? If you can comment on the market size of various geographies, and what is our share currently, and what is our aim probably in the next 5 to 10 years?
So, there are two segments of markets in our business. One is the South Asian diaspora, which is our Indian, Pakistani, Bangladeshi. That is one diaspora. And then there is the mainstream, which is the non-Indians. Okay. There is no organized data as far as the South Asian diaspora goes. As far as the mainstream market goes, I mean, US is growing very rapidly. Indian food is at a stage where it's at this cusp where it's taking off. And at the moment, the size would be at least our guesstimate is at least $300 million. In the UK also, the market is, Indian food is more mainstream. It's already at $300-400 million out here as well. So the runway is huge. Opportunity is huge, as you can see. we are making our goal now is, of course, our focus will be to keep growing within the South Asian market in all these geographies. But now we are looking at strengthening and penetrating into the mainstream market. So currently we are only in Germany, and now we are looking at the US market in a very aggressive manner for our truly Indian brand.
So basically the brand Ashoka is not in Canada or US, is that so?
No. Ashoka is in nearly 55 countries. That's our brand to cater to the ethnic Indian diaspora.
Okay.
Truly Indian is going to be the brand which will be launched, which is for the mainstream.
Okay.
Which is the non-Indian.
Thank you. I'll join back in the team.
Thank you. The next question is on the line of Akash Zaveri from PIA. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. My question is, could you throw some light on the current demand scenario in the US and the UK markets?
So the demand continues to remain good. We continue to expand and grow our product portfolio, add new products, increase our distribution. So we are not seeing any slowdown at all in demand.
This would be for US and UK?
For our products as well. Sorry?
This would be for the US and the UK?
Yes, sir.
Okay, fine. Thank you so much.
Thank you. We'll move on to the next question. That is from the line of Devanshu Sampat from Avendus Wealth. Please go ahead.
Yeah, hello, sir. Good afternoon. Can you hear me?
Yes.
So I had a few questions. One thing, if you can speak about is this agency business run rate of 18 CR, which has come down. So can you just talk about what's happening over there, or is it entirely an impact of the export ban into the UK?
No, so there is no export ban as far as any of our products go for the agency business. What has happened is we are agents for the tea brands which Unilever used to own, which is the Red Label tea, the Taj Mahal tea, and Lipton Yellow Label tea. Now that business has been sold by Unilever worldwide to a company called Ecotera. Now the whole transition has not been as smooth as expected by them, and there have been supply chain issues which they are facing currently, and which has led to the decline in sales for us because they have not been able to supply products to us. In fact, just before our call, I was on a call with the senior team of the Ecotera, and they have assured that from next year onwards, hopefully from the last quarter of this financial year, their product supply should get much better streamlined, and from the next fiscal year, they expect to be absolutely on the ball for supplying products and adding new products. So that's the reason why the agency business has gone down.
Okay, and so do you think this 18 CR number will remain for the rest of the year, or will it decline?
No, we don't. We hope it will only improve and not decline to what we have done so far. So we feel confident based on our conversation with them that they will be improving their supplies. So we remain optimistic that it will get better in the fourth quarter at least.
Sure. And there was also a discussion in the last call for signing up a new client, and we were very close to, normalizing it. So any update on that?
So we are still in discussions. This product is a beverage, and we are looking at a launch in the summertime. So we hope to finalize things with them by the last quarter of this financial year, and you'll start seeing that product being sold in the market from the first quarter of next fiscal year.
Sure. Okay. And my second question is regarding Truly Indian, right? So you just mentioned that the listings that we are talking about will be for next year. So, but in the presentation you mentioned something about launching them in 3Q. So will this? I'm a little confused over here. And so can you just clarify this, please?
So when we meant by launching, it was more of presenting to all these supermarkets have a schedule for when they do their range reviews and when they take in new products. So the showcasing of the products has already started, where we've been presenting to the various supermarkets. But by the time they finalize the products and do their getting the new products into their shelves, that will happen from the next fiscal year.
Okay. So does this push our our aspiration of growing 2x every 3 years? Does that get pushed this year?
No. So we've been growing at about. If you saw this quarter also, we've grown at about 17%, right? We hope to continue to grow in our other businesses. And the Truly Indian brand is already in Germany. So there we are hoping to get some more listings out there where we can grow it. So we will try to be in this 18 to 20% for this year growth rate for sure. And next year, once we get the listings of all our in the US supermarket chains, then that growth will be much faster once we get those listings. So we will continue to do our best to meet that of growing every 3 years on a standalone basis.
Sure. And have the two large listings in UK, have they started contributing yet?
Yes. So we've had one chain which has listed the products. It's doing well with them. The name it's Morrison's, who has taken our frozen food and the shelf-stable products, and that's doing well with them. And we continue to add more products, and we continue to showcase our products to other chains as well.
Can you give a sense on what will be the number of incremental business from this UK listings that you're expecting this year, or maybe annually from next year? On an annual run rate, basically.
So next year would be the full year that we would probably look at least £1 million coming in from this chain.
Sure. So I have a few more questions. Can I ask them right now, or should I come back to you?
No, sure, go ahead.
Okay, thanks. So just when it comes to our branding investments and the budgets, can you give me a sense on what the numbers you're working for Truly Indian and Soul, especially in the coming year? Because I think our annual run rate has been around 22-24 CR in the past 2 fiscals. So I just want to get a sense on how this number will look like in FY24 and 25.
So on the Soul brand, Shardul, you want to just share some light on the investment, what we are looking at on Soul?
So as you're aware, Devansh, in fact, in our last board meeting, we have committed rupees 5 crores for this financial year for the Soul business. So that's a budget which we have kept for investment in or promoting the Soul brand in Indian market.
Sure. And
Truly Indian brand this year, as we are just showcasing, as I said, we are looking at listings, etc. So in the next year, we would hope, we're looking at an investment of roughly about $500,000 in the US for the Truly Indian brand for next year, which will be more towards listing fees. So they call them slotting fees out there. And so we are looking at about a $500,000 budget for the Truly Indian brand.
Sure. Okay, and just two more queries. The food service vertical, can you give a sense on what's the development over there and the outlook and the plans over there, please?
So again, that is work in progress. We are presenting there as well, and we hope to get some, for all these, we hope to get some listings happening from next financial year. We should start seeing sales coming in from the US on both food service and on retail.
Got it. And just on your manpower costs, right? So now with all these recruitments, where are we on the hiring plans when it comes to senior management? And this 8.6 CR employee cost run rate, is that something that I can work with for the rest of the quarter, or is it number will still continue moving higher?
Shardul, can you please?
Yes, so this will slightly go up in the next couple of quarters. Also, I think a lot of these hirings, you will see that we would have, like in India, it's all as employees, but in the overseas market, they will come as professional fees. So the other expenses will also go up slightly in the coming quarter. Right?
Okay. And so what was your freight cost this quarter?
It's the same as last quarter, around 7%.
7%. Oh, standalone, right?
Yes.
Yeah. Okay. And so last query, if you may, any update on Nates and PJs? You said they submitted some samples. So what's the feedback you've got?
So we haven't, we haven't got anything positive to say on that at the moment. They're still reviewing it. We've not heard back from them. It's just that what has happened is there's been a long gap. So they are taking their own time to revert back. So as soon as we know on that, we will definitely let everyone know. But as of now, nothing, no news on both PJs and Nates.
Sure. That's it from my side. Thank you, and wishing you all the best. Thanks.
Thank you. Reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Dhiral from Phillip Capital PCG. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity.
Mr.
Am I audible?
Yes, sir, you're audible. Sir, there's a slight echo from the line of the management team. Please stay connected. Excuse me, sir. Hello?
Yeah.
Sir, there's a slight echo from your line.
Am I audible now?
Yes, sir. I'll request you to mute the other application.
Yeah.
Because it's causing a slight echo.
Hello?
Yes, sir.
Can I continue?
Yes, sir.
Sir, since you have hired the industrial biggies, so what is our medium-term and the long-term target that we have given to the senior management that we have newly hired, which we are looking to achieve in coming 2 to 3 years?
So as far as the India business goes, we are looking at in the next 3 years to get up to about a 50 crore top line. And the other thing is on the CapEx side, where we will be looking at our greenfield project up and running within the next 18 months.
Okay. So all the three senior guys that we have hired, so their focus will be purely to drive up the domestic business.
Yeah. So one person is on operations, director of operations. So his role would be more on improving efficiencies in our existing plants, putting the greenfield project, getting that up and running. And one is a marketing person. So her role would be more for assisting the sales team in all the marketing activities for the brands. And Balark is the one who is going to handle the India business. So his plan is in the next 3 years to get to a 50 crore top line for the Soul brand in India.
Okay. Okay. Got your point, sir. Thank you so much, sir.
Yeah.
Thank you. The next question is from the line of Pratik Dheria, an individual investor. Please go ahead. Pratik, your line is unmuted. Please go ahead.
Hello.
Yes.
Am I audible?
Yes, you are.
Okay. Sorry. Yeah. So just a quick question.
I'm sorry, we can't hear you at all. Your voice was breaking up. We couldn't hear you.
Okay. Is this better?
Mr. Pratik, may we request that you use the handset mode while speaking and not speakerphone?
Sure. Okay. Is this better?
So slightly better. Please proceed.
Sure. Okay. So quick question on what are your primary cost drivers, and do you see any inflationary pressures coming in down the line?
So as far as inflationary pressures go, there are certain commodities which have gone up because of the geopolitical situation, because of the crop failures. But when you compare it to what a year and a half ago, a lot of the commodities have come under control as well. There are some commodities which have gone up, but overall, it's not something that, at the moment at least, it's not a red flag, so to speak, for us. There have been some increases, but we are managing that with a better product mix and maintaining our margins.
All right. Okay. Thank you.
A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Saurabh Trivedi, an individual investor. Please go ahead.
Good afternoon, sir. Congratulations, first of all, for the decades of inspiring journey. I have a few questions. The first one is, what percentage of revenue is coming from Canada and UK?
Sorry, I couldn't. Can you please repeat that?
I asked what percentage of... Am I audible now?
Yeah.
Yeah. So the question is, what percentage of revenue is coming from Canada and UK?
From Canada and UK?
Yeah.
We don't give specific country-wise or region-wise, but it would be in the range of about 25%.
Okay.
Canada and UK.
Understood. I'm asking this question because many of the Indian students, the young people, are going and settling in Canada and UK. Right. So how are we catering to such audiences, the Indian audiences?
Yeah. So we see the demand on the uptake happening in these markets, especially on products like our ready-to-eat foods, our frozen foods, which are convenient for the students. So we are seeing growth on that front.
Yeah. Okay. Okay. And are we looking to acquire any organic or unorganic business nationally or internationally?
So we continue to look at opportunities, and when there is something, we will definitely make the necessary announcements. But yeah, we are always on the lookout.
Okay. And sir, the question is about dividend that we are paying 4 rupees per share. Are we going to use our cash and reservations, reserve cash that we have with us, cash in hand, or where are this money coming from?
This is coming from, we have enough cash sitting on our books, and even after giving out this dividend payout, we will still be sitting on about 140 crores in cash with us.
Okay. Okay. And so what are okay. And sir, what are our long-term plans? Let's say 5 years, 7 years down the line, about India as well as international.
So we definitely want to have India be, contributing to about 20% at least of our revenues 5 to 6 years down the line from here.
Okay.
We would like that to happen, and internationally we want to continue to grow and expand our reach and product range both to the ethnic diaspora as well as the mainstream. That is what our goal is.
Okay. Okay. Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Sir, I can say it is a reasonable result so far. Sir, in distribution, we are doing very hard work, hire few warehouses in USA and tie up with Patanjali, but growth is not coming. Even in quarter 2, it is deep blue. So will you tell some reasons what we are going to do and what is the reason not to deep blue?
So as I mentioned earlier on in the call, the Actera, which owns the T brands, has been having some supply chain issues, which is the reason why we've not been able to grow our business. And that is our main agency line, which we have in the US and in the UK. They are hoping to get back to normal in the next fiscal year, and they also feel that the situation will improve again in the last quarter of this fiscal year. So we are seeing, based on the supplies coming in, we will start seeing a growth in the distribution business.
So you are telling in next financial year, so still 6 months we have to bear all the expenses and we will not grow?
No, so it will not grow the way we would like it to grow. The fourth quarter, they expect supplies to get much better. And next financial year, they expect the supplies to be fully back to normal. But please remember, those warehouses are also meant for our own products, which is the Ashoka product as well, right? So the warehouse is being used for both the distribution and as well as for our own products.
Right.
And these are investments which one has made keeping 5-year horizon in mind, because you can't keep shifting warehouses every year, right? So we have invested in larger facilities because we have to look at least a 5-year horizon. So that's the investment that has been done right now for the future.
Right. Sir,
net fortunate that because of the supply challenges that they've had, that our sales on the distribution side has not grown.
Right. Sir, our net profit in quarter 2 of this financial year is down since last quarter 2 of year to year. So will you tell what is the reason?
Rajan, you want to?
Sorry, Ravi, Mr. Naredi, The profits have in fact gone up from Q2 to Q2. Are you referring to something else?
Net profit percentage, it is 12% in this quarter two, and versus quarter.
Yeah, you're talking about the PAT margin. So, as you rightly pointed out, the distribution business, which has a lower contribution in this particular quarter,
Right.
has some impact onto this. And then simultaneously, we are also doing the investment in our brand in Telluric, which is also putting the profits at the console level at this point of time.
Okay. For any incentive we have received from the central government in this quarter?
We do. Every quarter, in fact, we receive it. So whatever sales related incentives are there, we always receive those. It's a PLI which we will receive on an annual basis, and we will apply now for the last financial year and get. Hopefully in Q4 we will receive that also.
Okay. Thank you. Thank you very much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Devanshu Sampat from Avendus Wealth. Please go ahead.
Yeah, so just one more follow-up. What is the kind of business we are expecting from Patanjali this year?
So with Patanjali, we've not been able to grow that business quite a bit. We were planning to launch it in Europe, but because a lot of their products are not compliant in terms of labeling, etc., we've not been able to launch the products in Europe. The only market we have these products at the moment is UK. We are in discussions with the company to see how we can comply with the regulations, and it's work in progress with them. So it's just now a very limited market that we have in UK where we are selling these products. So it hasn't really panned out the way we expected it. There is some changing of labels, changing certain product recipes, all those things take time. So we are in conversation with the company.
So is the number expected to be flat from the same as FY23 or FY24?
Yes, there is no growth on the Patanjali business for us.
Sure. And so just a related question on this, right? We've been talking about the agency and distribution business complements our own brands and helps us, make inroads into all these retailers. But obviously that's a bit of a challenge this year with Ecosystem and Patanjali both, not helping. So does that change things for us? Does it make things more difficult? Anything that has changed as a result?
No. I think these are, it's just a speed breaker that we've hit as far as, in any case, the Ecotera business, the tea business was the bigger business for us. It's just a bump that we are going through. The company which has bought these businesses also is disappointed that the supply chain problem is there. They are also doing their best because they have invested billions of dollars in buying these brands. So we are going to make sure this gets back on track as soon as possible. And we're sure once things are back on track, we will see the growth which we saw initially a couple of years back.
Okay, and Unilever products will continue selling, right? So are the more... Sorry?
No, I said that we strongly believe the strategy of having these complementary products in our distribution pipeline is the right strategy, which will help our company's product business also grow and help us get better penetration in the market.
Sure, sure. And when it comes to Unilever, are we getting more products, more categories? And if you can just give me a sense on what is that number expected for FY24 in terms of absolute sales?
So with Unilever, we have just launched their Knorr soups, which is being made in Canada. And in fact, it has just been launched last month, because soups are seasonal in nature. It's more during winter time that you have the sale happening. So that has just been launched, and then we are talking to them for products from their portfolio as well. So at the moment for us with Unilever, it's just the Knorr soups that we have, because their whole tea business has moved out to Ekaterra.
Correct. No, I if I remember correctly, I think we were in talks with them for ice cream distribution. So just wanted to on that particular.
Well, they are still developing their back-end part on this, and as soon as they are ready, they will inform us. And because we have the distribution channel, we would be the logical partner for this.
Sure. Thank you. That's it from my side.
Thank you. The next question is from the line of Nishit Deepak Jain from SNJ Investments. Please go ahead.
Yeah, hi. Could you tell me what is the amount received in the current quarter as export incentives?
It's around 4 crores.
And it is included in the revenue, right?
Yes.
And lastly, can you tell me what is the export revenue for this quarter?
So out of 97 crores of top line in standalone, 93 crores is the export business, and 4 crores is the export incentive.
And the last, generally, if you see the third quarter, the domestic sales is expected to be high. Am I right? Is it right?
No, not domestic.
Pardon?
The domestic right now. I said it's not the domestic sale which our domestic sale at the moment is hardly anything.
Okay. That will be all. Thank you.
Thank you. The next question is from the line of Sriram R, an individual investor. Please go ahead.
Yeah, I have two questions. So basically, if I see the last 2 years, the heavy lifting is done by brand Ashoka. If I look at the non-Ashoka sales, it's actually stagnated on 150 to 170 crores.
Your voice is not very audible.
Excuse me. Just a second. Is it fine now?
Yes, sir.
Yes, it's better.
Hello?
Yeah, it's better.
Yeah. So if I look at the last couple of years, the heavy lifting to sales is actually done by brand Ashoka. Now, if I look at the non-Ashoka component, if I were to break it up, it's been stagnating around 150 to 170 odd crores. So I just want to understand what is the way forward here. I mean, should we expect the momentum of Ashoka to continue and the other brands will be where they are? Is that what to make out of?
No, so Ashoka is our flagship brand. It is sold in over 55 countries, so that's always going to be our dominant brand. The brands which you are going to see growing now and where we are making investments for the future is the Truly Indian brand and the Soul brand. And then our other businesses are also the B2B and private label business, which also we continue to try and get more customers and try and grow that business as well. So our focus is there on all the businesses, and the next few years is going to be investments for Truly Indian and Soul, which you will start seeing growth in those brands as well.
Okay, but there is one more brand called Kansama, right? How does it fit into your portfolio now, considering that you have Ashoka and Truly Indian?
So Kansama is again launched with a very limited product range and for a specific target audience. So that's not going to be a huge focus brand at the moment for us. We are not making any investments also in that. It is few limited products which are being launched for a particular diaspora. So the brands which are going to be their investments are going to be made will be the Ashoka, Soul, and Truly India.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you. Thank you everyone for taking time out of your day to participate on this call. If you have any other queries, please feel free to reach out to our investor relations advisors, Orient Capital. We wish you all the best, and again, very happy Diwali to you and your families. Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of ADF Foods Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.